Hello, good afternoon. Good afternoon. Hello, can you hear me? Good afternoon.
Yes, we can hear. Thank you.
Great.
Good afternoon.
Good afternoon. How are you keeping? You okay? How's weather at your end?
Yes, thank you. We are good. Yeah, I'm good. Yes.
Really great. So here in Leeds is cloudy. It's rain today. Yesterday was 25 temperature and today is 13. Oh, so weather is changed. Yeah? I'm not sure your end. Is it nice weather there? Is it sunny? Okay. So we'll start in few minutes. Please, if you have any question, you can ask. We'll start in just 1 or 2 minutes and hope everyone will join us.
No, okay, no question because the assignment I have not completely started because a little bit arranging. So, and also last, assignment discussion I missed. So I'm just a little bit far away. So today I completely listening, then I will have, if any question, then I just communicate it with you.
No problem.
So
Very welcome.
by email or
No
by
problem.
email.
As
Okay,
you
thank
want.
you.
Yes, thanks for joining and welcome. Good afternoon, everyone. We'll start our lesson. Today lesson will go through our LO2 learning outcome 2 of personal taxation. And as you know me, my name is Anjum Sattar. Please, if you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. Okay, so of course, whenever we teach, tax is always a question mark in terms of the rates. Rates carry on changing, of course, as working in tax and doing the tax return, we need to be always do the CPD. CPD is a continuous professional development, and we have to carry on improving and carry on uh, upskilling our rates. So please, just carry on your following according to the whichever finance sector you're applying in terms of the tax return. Of course, until 31st January, we can apply 23-24 finance sec, and of course, next year, which we can look around 25, 24-25. So that will be the key in our discussion today. We'll go through the income tax, national insurance contribution for taxpayers. Always good to be. Please, anybody, any question if you have before starting, always ask, always welcome. Okay, so this please, here is the link. Always good to be reflect. So where at the moment our skills are we being involved, or we know the property income, employment income, saving income, tax rate, and how we can calculate the tax here. Of course, nowadays digital calculators and all, behind the scene is embedded the tax rate, and we can calculate what tax liability is supposed to be. And of course, tax planning is illegal, which we can plan taxes to reduce tax and national insurance rate and the band. Those we need to be looked. Okay, so we had a discussion in the previous lesson. We said the basic rate is if you earn 12,570 is no tax afterwards. You have to pay 20% tax up to 37,700, and then of course, if you're higher than that, 40% additional rate, 45% in case of the dividend, 8.75, 33.75, and 39. In terms of the properties, of course, a lot of things change. If the property or the allowance or the repair, all those, we, especially in the companies, that's quite uh, uh, easy to claim things, but in personally we need to go in details, the property income. Of course, tax rate will apply accordingly. Okay, so that's personal allowance, which we need to be look around according to the finance act. I'll give you the booklet. Yes, we have plenty of questions because of course you're not exam based. course, is the assignment based. Your assessment criteria is only assignment you have to do, which is mean easily you can pick the example, you can use the rates. So that's we need to be look around the benefit cards and all. And then we had a in national insurance, corporation tax we can, but that's we focus more personal tax. The rates, of course, if it's apply the profit inherent tax is we can look around. Then class one insurance, 1 to 12,570 zero. If you earn more than that, then of course 12% and it's additional 2%. So NI is dropped afterwards. So NI as employers is zero if you earn 9,100 and 9,101 is or above. So then you have to pay 13.8% NI now. So employment allowance is 5,000. It used to be 3,000. Now it's increased. And these, the rates we can apply accordingly to the clauses and the limits which we have. Anybody, any question, please? If you have, you carry on asking regarding the rates. I included the link with a lot of examples, which is ACCA document. That's always good to be used, which I can quick, take you back to show you. And that's, you can pick the example. We can use these, in term of course, in PowerPoint slides, we have some old examples, some new examples, which we are trying to embed, so to meet the requirement of assignment. Of course, always good to be, you apply the latest rate, that's according to the, yeah. So you will see in this document, we've been given all the rates. And then we have examples like, if you example one here, you have started the business, you have the profit, you have the taxable income, you have, so these we can look around a lot of these examples we have, so we can embed in if you have a saving income. So you have a non-saving, which is mean employment income, you have a saving income, you have total income. So employment income is a 52,500, saving is 18,000, your total income is 54,300, 12,570, no tax, and taxable in then income after that, which we have 37,700, 20%, additional remaining is a 40%. And then of course, it's a saving. If you're a higher taxpayer, that's first 500, no tax. And then the remaining we have here is 1,800, remaining 1,300 will be 40% tax, So our tax liability 8,952. If the tax being deducted at source, pay as you earn, then of course we can minus and the remaining, the liability we have to pay. So that's the way we can calculate the tax, and the tax liabilities accordingly. Okay, so I'll take you back to our slide and we have example, which is our 2.1 LOs, which is about calculating the income either through the properties or we have, income. So we can look around the 2.1, calculate the tax income from employment, investment, and property. So we've been given the rates here. These are some old rates, but we can use example new as well, which I included few examples as I shown you one up. So like here we have the this is for purely profit we have from the property incomes. Okay, then we can look around these, these were old allowance. There was the 1,200, 12,500. Now it's been changed to 12,570, which we apply the personal allowance. Like you see in the example, earlier, which we go through more examples from the booklet, which I'll going to share with you the booklet. So that's, which we can look around. Like, let's, if we look, how we can apply the rates. So this is Finance Act 2019 and 20, but it can be applied to any Finance Act. But of course, rate will be different, as we mentioned in previous example I showed. So 5290, non-saving income, we have this through salary. We have a bank interest, dividend income, which is non-saving and dividend income. So we have to go in the bracket of saving and the dividend and non-saving income rates. So now the personal allowance is 12,570 instead of 12,500. That's only the key difference. Huh? So then we have a taxable income. Then the income from 5290 was the employment income. We minus the personal allowance, which now, of course, this year is the 12,570. So 37,790 according to the old rate. If we look, then of course we have to 20% tax up to 37,700, and remaining will go at the 40%. So we can look around these and under the savings. So these, the rates being applied to, and we can calculate it. Okay. Other than, I'll take you back to, and we can pick one example from the book as well, because today lesson really is focus about applying the rates, and calculating the tax liability. So this is the booklet which I'm going to share with you. So we have property, investment, and individual income. That's the question we have, which is given under chapter 3, page 33. So I can straight go to page 33 here, and then if I'll slightly scroll down, because that's the booklet, the page number sequence is slightly different, few pages down. So 32, and this is 33. So we have the property space. So these which we can look around. So we've been given the rent, less any expenses and rental income which we can. And we can look around. Here is example. Bought a property, rented it out at the 1st July, and the rent is 6,000 per annum, is paid alternately quarterly in advance and quarterly in arrears. So we can look around how much is the calculate the income assessment to compute the assessment for the taxpayer. And we have a lot of other allowances, deductions, and we can look around these examples. Yeah. So we have other example here. Example 2, furnished properties and all, so we can look around the benefit in kinds as well, the treatment and the properties. Yes. So holidays and rent relief. So we have to go back to, and the pro forma we have to use, to calculate the tax liability. So please, you can state go the property premium, income assessment, landlord, life lease, if we have the lease properties and things, so we have to adjust it accordingly. So in this booklet, please, at the end, you've been given all the answers of these. So you can pick, we looking the chapter 3. So you can go through chapter 3 and examples accordingly. That will help us, to look around and achieve our learning outcome. So that was the chapter 2. Scroll down, and so please, so you can pick, example to calculate the tax liability, applying the rates, all rates being applied in this, and you've been showing all the working are given here. So anybody, any question here, please? So the cross reference this booklet, and we can use the example from Finance Act 2023. Okay, then we have 2.3, determine the taxable value and the benefit in kind. So benefit, exempt benefit, and the taxable benefit, and the general rule. Thus we can, the living accommodation is a taxable, car and the fuel if you've been given for personal use, van and the fuel, and the beneficiary loan if we have to look around the base rate, and we can look around, so we have to pay, add it back, and because that's come under benefits. Sometime employment give you the loan without paying any interest, so removal expense, if you're moving one place to other place, still is 8,000 pounds. We can claim, if you're living abroad, so how much we can claim per night. So all the rules, £5 per night and so on. So under this Finance Act was 1920, but we can look around further under this year as well. CO2, of course, if it's a car, we have to look around the carbon emission levels, the benefit of the car if you're using, so how much worth of the benefit. So you have to look around the CO2 levels in the car, engine size and all, so we have to calculate. Is it less, the implies contribution, we have an implied contribution towards. So we can calculate these. Yes, so if we look these examples, let's please, if you want to look around. So we be given, calculate the given taxable benefit in respect of the car. And if we look the cars we've been given, is listed price of the car, her employer only paid 23,500 for the car after discount. The car is a diesel CO2, so you have to look in the rates. It does not meet RDE standard, European standard on the low emission. Of course, a lot of things change further as well. Given employers paid 5,000 for the diesel during and 50% which is private use journey. So if 50% can be look around toward the benefit and contribute toward the capital cost of the car. In addition, the contribution £40 per month for the private use and £30 per month. So we have to look around the CO2, which we have, here, appropriate, 105 minus 95. That's we've been given the formulas according to the rates. To any additional than that, which is 1/5, 2 plus, 23 plus 4 for the diesel. So total is 29%. Appropriate rate will be percentage apply. Car benefit, the listed price, less maximum up to 5,000 and remaining 20,000. If we look further in the notes, and the benefit is 20,000. We have the benefit because of course 25,500 you paying yourself, 20,000, 29%. So 5,800 less the employee contribution which you're doing £40 per month towards the car for private use, and then is total benefit you have 53,320. Fuel benefit you have the 24,100 times by 29%. That's the standard limit given in the Finance Act, and less the contribution as we have so that's we can, and then we can say the total taxable benefit. These are benefit you have to add it back into the tax, and you have to pay the tax on accordingly. So if you have a company car, you have to look around. That's the company car will reduce your personal allowance, and then you have to pay the tax on. Calculate the total income, liability, and national the contribution. We can look around the class 1, different classes, state pension, then employer contribution deduction. So we can look around if you want toward the merit criteria. Employees contribution 12% on the gross income. That was in the Finance Act, but we're looking now is 13.8%. Yes, after the limit of 12,570 instead of, but initially it was 8,632, but it's increased, and up to 50,000 if more it's 2%. Still we have excess. Employees contribution 13.8% of the gross income now is above the 9,100. So 5,000 is a employer allowance is available, not per employee, as a total company, and class 1 contribution 13.8 taxable benefit based on the same value. So we can calculate these. So you've been given here example, some we added. Yes, benefit in the respect of the company car and fuel, contribution living, and these are all. And what is the national? So total salary, benefit in respect of the car and the fuel, not applicable for NI purpose. And we can look around the vouchers and exchange. So total earning we have, so we can look around. Then of course, whatever the free, like 9,100 according to the Finance Act 2023, and then of course we can calculate are 13.8% now. So we can go back to the look the rates, yeah, and then we can calculate according to the current rates. Okay, that's we need to be, of course, pension and contribution, and we have to look around a lot of changes in terms of the pension happen. So we can look around the employment income, less pension contribution which we have. and net income, you have the personal allowance, uh, and then of course, because the pension is then now is a lot of things change. When you draw the pension, you have to pay the tax as well, and the pension. So we can look around that 37,500, 20%, 38. So we have two different, yes, example one, example two. If you have personal pension or occupational pension scheme, different scheme, and we can calculate the tax liabilities accordingly, applying the rates and the rules. Huh? So thus we have few, and please, we been given the links to do your quizzes and the YouTube, channel and the videos to watch. Okay, other than that, I'll take you back to in that booklet which I was mentioning. So we can look around NI contribution and calculation. That's which we can look around in that chapter. Please, I'm referring back to ACCA document as well as this open tuition. We have the booklet. Of course, we have different books, because of course Finance Act carry on changing. So here, please, NI contribution insurance, which is chapter 10. You can look around on page 95. So let's say 97. So here, NI contribution. So you've been given according to the Finance Act, please. Thus, we need to be look around the rates accordingly, and you will see there now is 13.8%. So that's, please, we can look around the rates, and we have to apply these rates accordingly. And you've been given a lot of the example. If you're self-employed, £3.45 per week, you have to pay class 2 NI contributions if you're certain threshold, which is 9,000 now. So these we need to be look around, and NI contribution we need to make. So please, we've been given a lot of examples and their answers. Those we can embed in our assignment when we do the assignment discussion. So we can pick, examples from these. And I'm going to share with you in the chat box the booklet to use. Okay, so 1 second, I quickly shared with you. Okay, guys, so here is the booklet. Please, good to use. I've shared with you the ACCA link. That's quite good to pick the examples and look around the application about the rates. Finance Act 2020. Okay, so that's the key concept of the lesson. We discuss about Finance Act 2023, employment income, how we can calculate. So we have £12,570. If you earn no tax on it, if you earn more than that, 37,700 is a 20% tax. Then if you earn more than 45, and it's a 40%. And if you earn more than 125,500, so we have to every 100, every 100,000, if you earn anything extra, so your personal allowance, personal allowance will reduce accordingly. That's we need to keep in mind. Property income expenses toward, that's we need to put the look around. Benefit in kind, anything which is not exempt all benefits. So we have to go back to look around the nature of the benefit you're getting from employment. That's we have to add it back, and that's we have to pay the tax. NI contribution, which we have to look around 12%, employers 13.8%. We have to personal allowance which can claim employers up to £5,000, not per employee. As an organization they can, and these we can look around these and calculations. So we have NI contribution, employment and saving, and these income. So we can pick examples too, and the booklet is I shared with you the example I shared with you as well, and we look seen a few examples in terms of the tax liability. Anybody any question, please?
No, thank you.
Thank you. So that's the key, in this LO2 to apply the rate, to calculate the tax liability in these, and apply the personal allowance. Okay, so that's all from my end. And the next lesson we'll go through LO3, and then we'll do the assignment discussion, and where we can go back and we can look around each, the task, and we can put the example. So I'll refer specific examples for you, and you can pick any example of your choice as well, no harm, as long as keeping in view of GDPR, General Data Protection Regulation, not really any personal clients and things. So please, that's we need to be anonymous. You can, you can include these. And please, if we can look around before next lesson, our LO3, I can quick, refer back to you our LO3, what is about. So that will help, so we can look around before our next lesson, our LO3. 1 second, I'll show you our LO3, then we'll nearly finish. Okay, so here are LO3, learning outcome 3. So which will go through explain the difference between chargeable and exempt asset. So capital gain tax, which will go through explain the difference between chargeable and exempt person, connected person, and calculate the capital gain tax payable by individual from the given data. So we can pick the data and we can calculate. So that's our LO3. So please, in the booklet which I shared with you, you can look around some examples, and those will go through in the next class. Thank you. Thanks for attending to this session, and we'll go through next lesson, capital gain tax. Have a lovely weekend, and I'll speak to you next week.
Thank you very much for today. You too.
You, bye-bye.
Thank you very much. Thank you very much, sir.
Many thanks. Thanks for joining. Bye-bye.